May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, please stay humble, focus on long-term, and never risk money you cannot afford to lose. Welcome to QuantBox Daily. Today is Wednesday, October the 12th. It's half an hour before London Open. Let's have a gander at our fundamentals. Has anything changed? Okay. So bias for euro dollar, still a strong sell. Look at all that red. Okay, giving us a score of -6. Any news to be aware of today? Got a couple of low impact and medium impact news events coming out today. Okay, that's cool. So everything remains the same as yesterday. Looking at our daily chart, you can see a lot of sideways moves represented over here. Need to be aware of that. Pound dollar, we've got a strong sell. News-wise, some low impact news events coming out today, and looks like we're due for a pullback to higher levels of resistance. Okay, we're okay with that. That does not mean we're going to buy. It just means that we're going to wait for higher opportunities to sell, right? Because bias is bearish. Okay, let's have a look at our dollar CAD. Our bias is still bullish. Okay, so we got some nice movement up in USD CAD. A bit volatile at the moment. So we've got to be very careful of that. We'll have a look at the technicals in a moment, but nothing has changed. You got a couple of low impact news events coming out for USD CAD, coming out of the States today. Okay, which I guess is what's affecting everything. Aussie dollar USD, we still got to sell. Okay, so notice how your euro dollar and pound dollar, your daily charts technical sort of showing flat, but your USD CAD is heading up. Aussie USD is going down. And yesterday we observed Kiwi dollar showing neutral. We're still neutral in this. So we're going to leave this alone, okay? Just as a form of discipline. If you've got no fundamental bias, then just leave it alone. Rather look for love in all the right places. So the bottom line is that euro dollar, pound dollar, dollar CAD, Aussie dollar, and Kiwi dollar, all the same biases as yesterday, biases as yesterday. Nothing's changed there. Looking at Aussie USD technically now, what's interesting is yesterday we found ourselves over here, and I still said, I don't want to sell down here. All right. Yes, the bias is bearish, and yes, I'd like to sell, but I've also got to be in a position to sell, right? And selling down here, not a good place to sell, right? We haven't really had an opportunity to sell this week. If you look at the 4-hour time frame, I mean, there's been opportunities in H1, but from a 4-hour perspective, we haven't really had any decent pullbacks, right? You can see price is just sort of like headed down, headed down, headed down, headed down into profit-taking zone. And yesterday we observed the fact that if price is down here on a Tuesday, we could be up here by the Thursday. So if you're looking for counter trend opportunities, you're still paying attention to anything that could give you a reason to potentially be short-term long, and then continue with long-term short next week. We'll have to see how that goes, if there are any changes in anything that head towards neutral. I doubt would head towards bullish, but head towards neutral. So looking at the H1 time frame, we notice like, this is interesting. Price comes up, breaks the 55, price comes down. We don't make a lower low. We come down. Now look at how price has sort of stopped out at the bottom of that range. Treat the double bottoms like a range, okay? i.e. we're no longer trending, no lower low. Price breaks the 55. Couple of things here that are interesting, right? So looking at this, ideally you'd like the higher low to indicate that you want to go long on this. And looking at the M15 time frame, you can see yesterday we didn't really get anything. You can see here price came up. Now remember, this over here is price breaking the 55 on the H1 time frame, coming all the way back down. When you take a look at an M15 chart, you realize that these wicks over here are candles, right? And you can see this over here being lower than this over here. Interesting situation. However, what is interesting over here is, look at that. So if you were looking for an indication of bullishness, that would be it over there. Price breaking resistance, resistance becoming support. If you were long over there, then your TP is up here, okay? That's where you're looking to get to by Thursday. If you did not get in there, that's okay. You could have used this one as the canary in the coal mine, sorry, and you could say, okay, well, I got this higher low, price comes up. Now, you could be waiting for the 2155 cross, and you could be waiting for a pullback down to that 21 EMA indicating bullishness. Just make sure you verify it, okay? Don't just trade the 15-minute chart on its own. You want to look at your H1 chart and make sure that nothing has indicated resistance or bearishness or whatever else, okay? Be careful. Make sure that you verified everything. But be sure of the fact that if this is bullish and we're suddenly going up, you're not just going to get one higher low, okay? You might argue that over here is a higher low. You can certainly see higher high, higher low, higher high, higher low. Structurally, higher than the previous two lows, okay? And now currently forming a higher high. So you're waiting for that pullback down to the 2155 cross. You're verifying that trade. If you see price closing at support in the 15-minute chart and you just want to make absolutely sure it's bullish, you can always jump down to an M5 or an M1. Just make sure you've got no indications when you take that trade of price breaking support and support becoming resistance or price closing at resistance, because those three things would be very concerning if you were looking to buy, right? So let's say, for example, price comes down and price closes at this support. Okay, so let's say that's what you're looking at, and don't be specific about the area because it could be coming off a wick, it could be coming off a 21. Okay, so we're just going to use this as a reference point. So let's just say price comes down, hits that support, and on an M15 chart, you're like, okay, I'm ready to go long. Well, you are in position. You're between the daily central and the daily M2. That's a good place to be. You've got these this sort of bullish channel that's been formed now, which is cool. Now, let's say you jump onto an M5 chart and you suddenly find on an M5, you got price breaking support and closing a resistance. Not a good sign. Let's say on M5, you got price holding that support. Okay, well, there's nothing indicating bearishness there. If on an M1, price hasn't broken support, cool. What happens if price comes down and forms some other kind of price action consolidation over here, and then price comes off this support but closes at resistance? Be careful. Make sure you're looking for indications of bullishness. What does that look like? Price is closed at support. Price is not broken. Well, bullishness, price is closed at support. Price has broken resistance. Resistance has become support. Those three things are very good indications of bullishness. Price breaking support, support becoming resistance, price closing at resistance. Those are things you want to be careful of if you're trying to confirm bullishness, okay? So be aware of those things as you verify your trades. And remember, if you're not sure and you're on a demo account, make a note in your journal. Say, okay, this is my analysis. I've identified the following from a fundamental perspective. I am, fundamentally, Aussie USD is currently bearish. However, I am currently at a profit-taking zone early in the week, and I'm looking for this to come up to the central. So I'm going to be counter trending this, okay? You also look at the daily and say, well, wouldn't it be nice to get a lower high? And we know that buying lower lows is a dangerous business, but because you got this profit-taking zone, you're going to verify the bullishness, okay? So jot down how you verified it, jot down, what you observed. And if you're on a demo account, take the trade and then look at the outcome of the trade, go back to your notes, see what you analyzed. And if you lose the trade, go and figure out how you misread the situation. If you buy an asset class, if you buy a currency, and you lose, it's because it wasn't bullish. So somewhere you missed out on a key ingredient on one of the time frames where price had broken support, price had closed at resistance, or price broke support and support became resistance. One of those three things will be visible on one of the time frames. So all you do then is you go and look for it and say, that's where I made my mistake. You make a note in your diary and you say, cool. So in my analysis, I saw the following. But in my post-analysis, I saw this. You need to be aware of that in the future. And so you learn, right? So nothing wrong with doing this on demo and learning how to do this properly. Once you feel confident in your control and your consistency, you can always move over to a live account once you've got a track record of success, right? Nothing wrong with doing that. Remember, Forex is one of the very few businesses in the world where you can actually practice in a demo environment. Imagine opening up any other kind of business. Imagine opening up, and I often use outbound call centers as an example. Imagine opening up a call center and you're able to practice in a demo environment for 12 months. You're able to practice on clients. You're able to practice bringing in deals, closing the deals, working out your entire cycle, your business cycle in a demo environment. And then once you know you've got it 100%, then you can go live. Can you imagine if any other business gave you that opportunity where you didn't have to risk real money in learning how to trade in that particular business? Forex is very unique in that way. Use that to your advantage, okay? Looking at the euro dollar, what's interesting is that, just going back to the Aussie USD, we look at our Aussie USD and we've got an indication that we're going to head up. Okay. So we're looking at what? 6441. So 6423. That's pretty much what we're talking about here. 64028 is a 55. Okay. We've got some role reversals over here at 64007. So even QuantBox is indicating a potential pullback, right? You can see it's either we're going down further, or we're pulling back, or we're pulling back, right? Now, in this situation, based on your technical analysis and understanding pivot point theory, you can see that potentially we could head up there, right? Cool. So then this is now supporting your strategic view, but remember, you must verify it using tactics, okay? You got to have fundamentals, you got to have technical strategy, you got to have technical tactics. Put it all together and you've got a recipe for success. Control, consistency, confidence. Looking at let's go through all our commodities first. So Kiwi dollar, we said it's neutral fundamentally. We're going to leave that alone. USD CAD. Right. Okay. So from a daily perspective, we're all the way up here. I'm seeing consolidation. Look at the chart and see what story it tells you. If you've got a higher high, higher low, higher high, higher low story, then chances are you're looking to trade a bullish trend. If you've got a lower low, lower high, lower low story, chances are you're selling a bearish trend. If you've suddenly got a high, higher low, higher high, lower low, no lower high, you can see how there's no continuation in that structure. If over here you had a high, a low, a higher high, a higher low, a higher high, like down here, you'd be trading a bullish trend. Notice how right now we don't have anything showing that to us in a daily time frame. So maybe right now is not a good time to be buying. And also look at this position, M3, central, right? On this time frame, I don't see any opportunities to trade. I'm not going to sell because fundamentally I'm a bull. Looking at the H4 time frame, right now, as it stands, currently, price is not any form of support. So I'm not going to go into London and take any trade on this. Now, in terms of a counter trend trade, like our Aussie dollar counterparts, I'm not seeing price in a profit-taking zone. So I'm not looking for a counter trend trade on this, okay? The only reason why you'd consider a counter trend trade on the Aussie USD is because price is at a profit-taking zone, but you would verify that using solid tactics. Right now on the USD CAD, I'm not a massive fan of trading this. I'm not at supports. Also, look at the story that the price is telling you. Higher high, higher high, let's call the higher high, higher low, higher high, higher low, higher high, higher low, lower high. And we came off a 21 and didn't make a higher high. Be careful. This is consolidating, okay? Rather find a better opportunity somewhere else. And you can see yesterday, if you were in the session yesterday, this weekly stop look and correct session, then you will know we spoke about this over here, this whipsaws, and how you can manage this type of stuff if you're insisting on taking trades like this, okay? If you're insisting on taking trades like this, how you manage those trades and how you don't fall in love with this beautiful long-term move when nothing on the higher time frames says long-term move, all right? Know your enemy. Okay, so those are the commodity currencies. We really have Aussie USD and USD CAD, Kiwi dollar, neutral. Looking at our euro dollar, now euro dollar, we've got a fundamental bias, but we still look at our QuantBox. We can see here, not saying a lot about movement up or down, right? Some movement up and then sideways, some movement up and then sideways, slight movement down and then sideways. Now looking at the charts, we can see, notice how we've kind of just stopped over here, right? And this was interesting because when we came into the week, we noticed that price hadn't made a lower low last week, Friday. We stopped over here, which was interesting. it's not to say we don't eventually head down here, just saying that right now it looks like we're stalling for some reason. Okay. And it doesn't necessarily mean this is long-term bullish because we don't see a reversal pattern. We don't see higher high, higher low. Okay. But this over here, not great in terms of the continuation of the bearishness. Perhaps for a moment we're consolidating. Looking at the euro dollar H4 timeframe, I'm not seeing any reason to sell. Okay, something's wrong with our bearish trend. We've suddenly got this low. We come off 21, fair enough. We drop, oh, that's fine, we're bearish. We come down, we come down, we come down, we come down, and we break this resistance. And this resistance becomes support. That's quite strange. Price comes up, comes off this 21 EMA and does not make a lower low. Okay. We look left-hand side of us, we can see, look at how price is sitting on this roll reversal over here. So now we got this support over here. We got this resistance over here. To me, this says chill. Okay. Look at the H1 time frame. Look how that says chill. Okay. I don't see a counter trend trading opportunity because I'm not at a profit taking zone. So I would just relax with euro dollar right now. And it's interesting how QuantBox is saying sideways, and we're looking at our chart and we're saying, yep, get that. Okay. So pound dollar, similar things are happening here. Okay, maybe a slightly different story, but also, I mean, this is a candle is still open right now, so this could be just coming up to resistance, then going to drop down again. If we look at the H4 time frame, not seeing the most amazing trending behavior. Like, why have we not come up here, hit this, and then by now made that lower low? It's not to say it won't happen in the future because fundamentals haven't changed. It's just to say be aware of the fact that right now price is just showing us something interesting. Like, for example, we range over here, we pop up to, I wouldn't be using this 2155 because this is not an amazing momentum right now. Pop up over here, we shoot down. Now we're coming up to this resistance. You could be paying attention to this resistance over here. Okay. Waiting for price to close at it. Now you can see we got this candle closing, this 4 o'clock candle. That's the last candle before London open. So if we take a look at that and we say, okay, well, let's take a look at our H1. We had a 21 EMA. Okay, fair enough. You might look at that and say, well, that's resistance. Okay, cool. You know, price made this lower low. What's interesting is that we broke this resistance over here. This price came up. We did not test it as support. Price coming up to this 21 EMA. I wouldn't just use the H1 time frame to verify that. You can see we kind of broke this resistance on the left-hand side. Doesn't necessarily mean we're going bullish because you can see right now price isn't sitting on that support. But looking at a lower time frame chart, I need to see an indication of bearishness. Right now, you look at that and you say, I'm not feeling this being very bearish. Why am I chilling in that support? Where's my lower low, lower high? Right? We broke through the 21. We came up, broke through the 55. Didn't come down for reversal, fair enough. But now we're chilling on the support over here. Just be careful, okay? You can see here on that 5-minute chart. I'm not seeing anything bearish just yet. Continue paying attention to it, of course, if you want to. But right now, as you head into this market open, I'm not... This over here concerns me about in terms of, like, remember I said to you, if price breaks resistance and it becomes support, that's something that that's a red light for you as a bear. You're like, how can there be enough bulls to hold support? If we say something is bearish, it means there are more bears than bulls. How can there be more bears than bulls if support is holding? I'm not saying this goes up and you should buy. I'm just saying that tactically, you need some confirmation of bearishness in order to sell at resistance. Okay, so be careful, be very, very careful. Okay, then taking a look at so that's all our dollar pairs. If we jump into the Aussie yens, if we jump into the yens, so Aussie yen we saw yesterday was bearish. Fundamentally, we still got bearishness. News wise, we got some, let's look and see, this already came out. Actual, no, not yet. This is late on today, 17 hours. Okay, cool. So a few items coming out of Japan and Australia later on, low impact items, but still bearish. CAD yen, is neutral, so that hasn't changed. We continue watching this because we want to see when we suddenly change. Okay, when does our bias change to bearishness, right? Euro yen, neutral. Pound yen, neutral. Kiwi yen, neutral. All right, so still Aussie yen is the only one. So looking at this, we take a gander at Aussie yen, and we see, okay, from a daily perspective, this candle here, I'm not currently at resistance. Where's resistance? Well, I mean, resistance is over here. Resistance is over here. It's over there. I want to see, did this close at support on when it came down? Are we still stuck inside this range? Looking left, I can see lots of wicks down here. Okay, feels like I'm still in the range. But if I get like a lower high and I can verify that lower time frames, sure, I'm interested in paying attention to that. But as it stands right now, I'm more at support than I'm at resistance. Okay. Now, because we're sideways over here, I'm not really keen on trying to find a trade somewhere else. Now, what's interesting is you combine that bottom of the range with this profit-taking zone, and you say, ooh, potential counter trend trade. Okay, we have to verify it though. Notice how price came off the 21 EMA, came straight down, didn't make a lower low. It doesn't mean it won't happen in the future. It just means that right now, we are not trending at this present moment in time. That is consolidation. Okay, look at the story that price is telling you. Then we look at the H1 time frame. You can see there, price came up, broke that 55, came down, did not make a lower low. Take a look at the M15 chart. What have you got? Okay, there's that break, there's that pull down. Now, if we take a look at this over here, interesting how these candles are now chilling at this support. Okay, so if you were looking for an indication of bullishness, consolidation, 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 you can see there's one down there. Price breaks the resistance, becomes support. Remember, if price is bullish, resistance means nothing. Price comes up, price comes down, and there we are. There's the support. Price comes up. So if this is bullish, there's no need to buy it now. If this is bullish, price will come back, hit the 21, and then go up, come back, hit the 21, or role reversal, go back up. And that'll continue until such time as it reaches the target. Right now, your target for this would be the weekly central, okay, by Thursday. And we did speak about this yesterday, so it's not a surprise to you. But I did say to you, make sure you get a confirmation of bullishness before you take this trade. Don't just like jump in and slap it down. You might look at this chart and say, oh, I could have just bought over there. But remember, if you did the same thing over here, you would have lost. So you've got to be consistent in how you're analyzing your charts technically or strategically and tactically, and make sure that if you are counter trend trading, that you are aware of that. You make that statement to yourself that says, okay, fundamentally, this is bearish. I observe that right now I'm at a place where bears could be getting out. And so therefore, I'm okay with verifying bullishness at a place where profit taking can take place. I'm going to be short-term long. Short-term long means you're not falling in love with the idea of this going up for the next couple of weeks or months. You recognize that your strategy is going to be, I'm taking a counter trend trade down here after verifying it in the lower time frame, and my target is the weekly central. And your take profit goes there. Obviously, you can observe price and just see, maybe price falls just short of that. That comes into managing the trade later, but you are very, very specific on how you're getting in and how you're getting out. Don't make yourself fall in love with the fact that this is now suddenly going to be a trade that goes up forever. If something changes and suddenly the Aussie yen becomes bullish, you will see something happen on these higher time frames that will give you that indication. And you can then get into a longer term trade on that setup. Right now, make sure you know how you're getting in, you know how you're getting out, and stay true to your plan. Have self-integrity. Okay? Be true to yourself. The rest of the yen pairs, we've just got sideways, flats. Okay. I haven't really brought the Swissies into the analysis this week. I suppose I can bring those back tomorrow or bring those in tomorrow. But right now, this is where we're at. So I think really what I'm paying attention to out of everything today is really the Aussie dollar and Aussie yen. Now, if I jump into a watch list, what I could do is in my watch list, I could actually clear this out and clear this out and bring this over here and say, okay, cool. There's my Aussie USD. There's my Aussie yen. Now I know what's going on from a 4-hour perspective. I know what's going on from on both of these. Okay. H1 as well. Okay. H1 as well. So what I could be doing is I could either drag these up so that I have a view of the higher time frame and then bring in, let's bring in an Aussie and let's bring in an Aussie yen. And just, let's go like this. So Aussie, 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 cool, cool, cool. And then bring in my daily pivots. Okay. So I've got this over here. I've got this over here, this over here. So instead of looking at H1, I could bring this down to M15 and I could be waiting for that pullback. Okay. Just waiting for that pullback. And all I'm doing on the H1 time frame is I'm looking at, has the H1 candle closed? And again, have I got any indication of bearishness? I.e., has price closed at resistance? Has price broken support? Has support become resistance? Those three things are anti-bullish. If not, and price is now closed at support over here, I'm like, okay, H1 still looks bullish. M15, verify, price closed at support. Cool, I like that. You could look at an M5 quickly and say, is there anything here that tells me that price has broken support, support has become resistance, or price has closed at resistance? No, okay, I'm golden. And then you can pull that trigger once you've verified that. Same on the Aussie yen, right? Where does your stop loss go? Well, as I discussed yesterday, if I am, you can see here, I'm really using daily pivots, maybe kind of using weekly pivots as well, because we've got this profit taking zone. So you could either be looking at this from a weekly counter trend trade. So your target's the central. So therefore, anything you take over here, you really want your stop loss below the weekly S2. And I'll give it some room. I'd say like just so 20 pips below there should be fine. Okay. If price comes all the way down, then knocks you out, then you definitely want to get out down here. You don't want to like sort of move your stop and move your stop and move your stop. Price has no business being down here with regards to the type of setup you're looking to trade over here. Okay. So you could be looking at it from that perspective, taking it from the weekly M1, price, your stop loss goes below here, and your take profit goes over there. And I mean, let's just say you were buying at market, that's 141 pip take profit for a 20 pip stop. That's a decent ratio, okay? Outside of that, if you were looking at this from a daily pivot point perspective, then really the closest you've really got is this M2. And so you'd then be placing your stop just below the S1. Again, price has no business being down here. If price comes all the way down here and breaks through all this support after you've verified it being at support, chances are either you didn't verify that support correctly, there was some bearishness on a different time frame you did not acknowledge, or price came up, you didn't take profit when you're supposed to, and price then came down. All right. The second one's more tricky because the second one means you got to continue paying attention to this trade. Now, I don't know how much time you have in your hands, but personally, if my plan is for me to do a counter trend trade and I'm looking to take profit over there, then that's the trade. Win or lose, right? Stop loss in, take profit in, win or lose. And my take profit will probably go a couple of pips in front of the central, just so I can account for spread. Okay. Or a situation where maybe other traders who are trading this have different open times on their charts, and maybe their pivots are slightly different. All right. And that's how I do that. And so this is my watch list today. Going into the New York open, one could be looking at that and saying, okay, what am I setting up here? What am I paying attention to here? But until such time as I get the close of the New York bias candle, which is the, let's look and see, is this candle already closed? This is an H1 time frame. This 8 o'clock candle, when that candle is closed, I then redo my analysis for New York, okay, on all the pairs. And the exact same process I followed with you in this session gets followed over and over and over again, okay? If you like this video, please click like, please click subscribe, please click the bell. And I thank you very much for your time. I look forward to seeing you in our session tomorrow. Have an amazing day. Stay controlled, stay consistent, stay confident. Thank you very much for your time.